Well, it may be the last trading day of the first half of 2021, which is including the best first half of the year that we've seen for the financial sector since 1995. But it is the first day of trading for a lot of the names we are watching out there today, including Didi. You're seeing indication come across that we would be seeing that right now, indicated open at a range of $15 to $16. We'll see what happens, but it's keeping our chart master, Jared Blikre, rather busy today. I want to get to him for the latest moves. Jared?
Yeah, no fewer than 8 IPOs, including Clear, who was ringing the opening bell over at the New York Stock Exchange. I was there for that. A lot of excitement. And Didi, it was just released for a quotation just recently, within the last 10, 20 minutes or so. So you know it's probably going to take a little while to open up there, get that first trade. I do want to go over some of the end of the quarter, month, half stats here. And for that, I have the Wi-Fi Interactive. I'm going to start with the sector action. And this is what's going on today. You see energy and industrials leading in the upper left. But let's go to a 1 month view, because over the last month, we've seen a real acceleration in some of the mega caps. So tech, that's XLK, that's up 6.7%. That includes Apple and Microsoft. Those are some of the biggest there. Then we have discretionary, consumer discretionary up 3.6%. That includes Amazon and some other big retailers like Walmart and the big boxes. And also real estate and energy and communication services. So of these, I think real estate is kind of an outlier here because the 10-year T-note yield was a little bit depressed. Energy having another great month as crude oil surges past 70 and approaches $75. But I just want to show the difference between the last 3 months, because we're going to see kind of the opposite here. We do see tech in the forefront, but communication services is a lot hotter. And then we have energy, that's up 8.5%. And then you contrast that with what's happened year to date. And that's where you really see some of these eye-popping numbers, because if you'll recall, the tech trade, Tesla, ARK, all those guys peaked in roughly mid-January. And then it was a value and cyclical trade, which took over for a few months. And that's what we're seeing here. Energy up 41%, financials 24%. Then we got real estate, communication services, and everything's in the green here for the year. Utilities is the biggest underperformer, along with staples. That is a defensive setup there that actually points more to the bullish case. So let's look inside the NASDAQ. And this is the NASDAQ 100 components. And here we have the year-to-date total. So might be surprised to learn Apple is only up 3% for the year. Alphabet's up 38%, Microsoft 21%, Facebook 27%. But if you take a look at the last 3 months, and this is the closing quarter here, the second quarter, you can see Apple really clawing back here. So Apple's up 14%, and it just kind of gives you a different perspective. We talk about sector rotation and portfolio management a lot, and you can have rotation within different styles. And these themes tend to persist for weeks and months at a time. So I think we've seen 3 distinct regimes this year. Coming into the year, it was all about the growth trade, then it was value cyclical. And then over the last month to 6 weeks, it has been really about the growth trade once again.
Yeah, and Jared, turning to one company that's not even public yet here too. We were getting news out about Robinhood earlier this morning that Finra was coming out with the largest ever financial penalty for Robinhood, tied back to some of what we saw before earlier in the year when it comes to market outages, but a $70 million total for them to pay. I mean, you and I, Kiko, we covered it here on the show. What's your reaction to that?
I'll tell you what, this is a landmark decision, and I think it just shows the disregard that Robinhood really had for its customers over the years. They prioritized scale over servicing their customers properly, and they got called on it. On the March, I think it was March, 2 days in March of 2020, they had outages for most of the day, and Finra found that they have to pay restitution of $5 million for those trades that people weren't able to execute. Then you have false and misleading disclosures. They have to pay $7 million in restitution because of that. They were letting people trade options because some AI bot had approved them without human supervision. So there are a lot of things there that really, I think, identify the culture at Robinhood, which was growth first, customers second. I'll tell you what, I read some of the fine print in the enforcement action. They're going to have to put in landlines so that people can actually pick up a phone and call them. They couldn't do that because you could only do that through the app before. And as I said a long time ago, if your broker doesn't have a phone number, get another broker.